Good afternoon. Welcome to another toolkit. For August 14th, today we are featuring She-Lia Henry from Account on Us. And we would like to thank She-Lia for being here. Her topic today will be business entities. Before we turn her loose, we'd like for you to know about our sponsors. The City of St. Cloud, Osceola County, Orlando Health St. Cloud, OUC The Reliable One, and Osceola County Realtors, as well as Toho Water Authority. As always, we appreciate their support. We invite you to make the toolkit part of your monthly business calendar. For the month of September, Experience Kissimmee will be with us to discuss how your business can tap into Florida tourism. So be with us and make Toolkit part of your educational process. Want to introduce our guest speaker this morning. She-Lia Henry is a partner at Account on Us and serves on the St. Cloud Chamber of Commerce Board of Directors, bringing deep experience in accounting, finance, and small business support. With a strong focus on empowering entrepreneurs through sound financial practices, She-Lia plays a key role in promoting economic stability and growth in the St. Cloud area. Her leadership reflects a commitment to service, professionalism, and building lasting business relationships. And with that, we welcome She-Lia Henry.
Thank you so much. Good afternoon, everybody. So we're going to be discussing business entities, the pros and cons. And I have created a PowerPoint presentation to focus on the 4 business entities. The one I left off of this is nonprofits, because nonprofits is their own animal. It's something totally different. So we're going to start with the 1040 Schedule C. So the 1040 Schedule C is mostly for sole proprietors. If you don't want to go through the setup process of your entity, you can use your name and your social security number and put your business income and expenses on a Schedule C. And it's also for people, if you do set it up, it's what the IRS will throw you in the category of if you're an LLC and you only have one owner. To them, you're a sole proprietor. So sole proprietors, the pros are there's no setup, one owner, you report your income and expenses, and for the state of Florida, we have no state taxation. Because it goes on your personal tax return. Limited liability company, that's when you actually set it up, you create a name, you set up your LLC with Sunbiz, and you go to the IRS and you apply for an EIN and you let them know you're going to be a limited liability company. It's an easy setup, it's quick, it does not take that long, it's one owner, and the IRS will tell you in the EIN letter when they issue it to you that you're still going to report your income and expenses on your 1040 or Schedule C, because LLCs with one owner are still classified as a sole proprietor. No extra tax return needed. And again, we're in the state of Florida, so we have no state taxation. The downside to being a sole proprietor or an LLC, where you report your income on your personal tax return, the 1040 Schedule C, is that your income and expenses go on the 1040. A lot of lawyers try to say set up an LLC, it's a limited liability company, so it limits your liability for the company. That's legal jargon. As far as when it comes to being sued, you have to give, like, proof of income, you gotta give them your whole entire personal tax return. So everything on that tax return is now attached. You can't just give them the portion of your Schedule C. One owner, you cannot add any other owners. So if you're one owner, sole proprietor, you can't say, oh, well, my wife's an owner also. It's just one owner because there's one social security number attached to it. There's nowhere in your Schedule C for 2 social security numbers. And you have to pay self-employment tax on any profit. So self-employment tax is basically Social Security and Medicaid, what you call FICA on your W-2. So whatever the profit is, they add 15.3% in self-employment tax on top of your effective tax rate. And as an LLC, but putting your income and expenses on a Schedule C. If you decide, oh, I wanna like set up a payroll account and process payroll, if you process payroll in this format, you're gonna be double taxed, because you're gonna pay Social Security and Medicaid, self-employment, FICA in the payroll process, and then again on your profit, which to me makes no sense. Another downfall of an LLC or being a sole proprietor is that you cannot go public. Any questions on the 1040 Schedule C sole proprietor LLC corporate entity setup? No? All right. Next one, partnerships. So the partnership entity goes on tax form 1065. When you set up an LLC and you're setting up your EIN number with the IRS, if you list that there's more than one owner of the business, the IRS will automatically make you a partnership. They determine basically what entity you are based on the information you put on that application. So even if you say I'm an LLC, but my husband is, a part owner and I'm an owner, they're gonna automatically make you a partnership and tell you have to put your income and expenses on a partnership tax return. So the benefits of a partnership tax return is that LLC with 2 or more owners becomes a partnership. Your partner, the partnership tax return is like a pass-through entity. So it's an informational tax return. You don't pay tax on this return itself. You get a K-1 and the profit that's split between you and who the other partners are, or whoever you listed as the other owners. That goes on the K-1, the profit or loss, and then it rolls over to your personal tax return, but only, the profit or loss, not the detail. The detail stay on the 1065 form. This here, by having this one, you do limit your liability to the owners, because if you get sued, you need to prove the partnership or the business, income. You're giving them your partnership tax return, not your personal. So only what belongs to the partnership will be attached. And again, we live in the state of Florida. It's a pass-through entity, so because your profit passes to your personal tax return, individuals, we don't have state taxes, so that's a plus. The downfalls of being, or this type of entity setup, is that even though you're using a separate corporate tax return, when you pass it through to your personal tax return, you're still gonna get hit with the self-employment tax. So whatever profit you have, when it gets to your personal tax return, you still get hit with the 15.3% self-employment tax. And then if your partnership has a payroll account already, you're being double taxed because you're paying through the payroll that self-employment or FICA, Social Security, Medicaid, and then when the profit gets to your personal tax return, you're gonna pay it all over again on the profit. And mostly partnerships are for professions like lawyers, doctors, CPA formations. They're a professional legal liability company or partnership, because the IRS will not allow these type of professions to incorporate. Any questions on the partnership forms? No, you guys are a great audience. Not long at all. So my favorite is the S-Corp. So the S-Corp formation you use is the 1120 S-Corp form. You have to tell the IRS that even though you're setting it up as an LLC, you want to be an S-Corp, or even though you're setting it up as a Inc. at the end, or limited company at the end, whatever ending you put on it, you have to fill out a separate application to tell them I'm an LLC, name stays the same, but I want to be taxed as an S-Corp. That's all the S-Corp is. So the S-Corp is just telling the IRS that You know, I'm an LLC, I may have one owner or 20 owners, but I don't want to be taxed as a partnership. I want to be taxed as an S-Corp. So the S-Corp formation is normally for small businesses. The owners get common stock, which is basically your shares in the business. When we do the articles of incorporation, it's normally $1, 100 shares, $100 that goes on your balance sheet on your books. So I always start all my businesses off like that. This, you limit your liability because your income, your expenses, your assets go on a separate tax return. The S-Corp is also still a pass-through type of entity. So all the shareholders get a K-1 of the profits or losses for their percentage of the profits or losses. And it rolls over to your personal tax return, but only that part of the profit or loss on the Schedule E rolls over to add the income or the loss to your ordinary business. And here with this one, you eliminate self-employment tax because the IRS don't charge self-employment tax on S-Corps. So if you wanted to set up payroll, you set up payroll on your S-Corp and you're not double taxed. As an S-Corp, you function as a small corporation, a subchapter corporation, even though you're a small business, which means if I do set up payroll, because I'm making enough money to pay myself, I can also set up a 401k plan that the business owns and administers. And I'm the owner and the employee, but I'm the participant, so the IRS allows me to contribute $20,000 and the company can match me if I'm not hiring non-relative employees. And it's just gonna be me. I can match myself dollar for dollar. So you just eliminated $40,000 from the profit of your business and your balance sheet and put it into a retirement account under your name and social security number. And you pay the taxes pre-tax and pay the tax on it whenever you take it out. So you can also open up S-Corp medical. If you're making enough money that your S-Corp can afford to pay that. So your medical expenses, you still have a private personal claim, like the marketplace. But the premiums, it'd be a paper entry on your payroll check so that you can get the credit and the business can take the credit as an expense. And when that rolls over to your personal tax return, whatever those premiums are, you get that credit on your tax return for having your own health insurance. Something you can't do on the Schedule A. What else? Also, no state taxes because Florida. Yay. You can also set up your vision and dental plan on there under the business name, and you as the employee can participate in it. So you'll function just like any other corporation. However, you'll be taxed on the profit as an individual. So that's the benefits of the S-Corp. So how the downfalls of the S-Corp. You're limited to 100 shareholders max. You can't have more than 100 shareholders. There's no preferred stock available for S-Corps, only common stock. And all shareholders have to be US citizens or residents, and yeah, you can't sell your stock to the public, so you can't go public. So S-Corps are privately held corporations for like you and your family and things of that nature. To be honest with you, whoever you want to be a shareholder can be a shareholder. You just have to put their name and information in the tax return, whether you have a partnership or a shareholders agreement with them or not. It's not technically mandatory, but it'll be cleaner for legal purposes, especially if they're not family. Any questions on this formation of business? Yes.
First question. You mentioned articles of incorporation. I think this is the first time you mentioned it. Is that a document you recommend having regardless of your entity?
That's a document that is only necessary if you're going to apply for EIN number with the IRS. And on Sunbiz, it's basically generic, like they give you put your name in there. The purpose is whatever purpose or general purpose for running the business in the state of Florida, blah, 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 blah. But if you go to like a lawyer or an accounting firm to have it set up, they have boilerplate articles of incorporation that you can have for your documents, because sometimes when you go to the bank, they want a copy of your articles of incorporation, a copy of your EIN letter, or if you want to take out like a loan or things of that nature. Any other question?
You may have said this, but I might have missed it. So maximum is 100 shareholders. What's the minimum? One?
Yes.
Okay.
You can set up an S-Corp with one shareholder. So it's basically the setup for the LLC formation or the partnership formation is the same. So when you're applying for your EIN letter with the IRS and you list more than one owner on there, they're gonna send you an EIN letter saying that you are a partnership, and then you fill out a separate application and say, okay, I'm gonna be taxed as an S-Corp.
So you can call yourself whatever you want to call and then pick the
How
tax.
you wanna be
and-
taxed?
Interesting.
That's the purpose of the
Okay.
S-Corp.
Didn't realize
If
that.
you have the right accountant.
There you go. We'll talk about that later. Yeah. Very good.
Okay.
So-
Yes.
What on Sunday, will it tell you if you have an S-Corp or if you have?
No, so Sunbiz don't make those determinations. The person actually paying the fee and putting the information in tells Sunbiz what they are. And normally it's you set yourself up as, on Sunbiz, a for-profit, domestic company or a non-for-profit domestic company, or, articles of, I forgot what the other one's called, but to be an LLC. So you normally tell Sunbiz, and when you set up your articles of incorporation in your account, basically with Sunbiz, you don't have your EIN number yet. So the next annual renewal, that's when you enter your EIN number. Because you have to do the articles of incorporation first before you apply for your EIN number with the IRS. Because the question they ask is, what state are you incorporated with? Next. All right, so for the state of Florida, I do have to talk about being a normal C corporation. I don't really like setting companies up as a normal C corporation. However, if you're gonna be a nonprofit organization, this is the only setup that you can do that transfers to a nonprofit organization. So if you set yourself up and you put LLC at the end of your name, you cannot transition to a nonprofit organization. You cannot, you have to have the end in Inc. Or be unincorporated. So C corporations for the state of Florida. The pros is that you can go public and sell your shares on the stock market. You can offer shares to founders, employees, investors. It is not a pass-through entity. So the bottom line profit or loss do not roll over to your personal. It's totally separate. So if you owe tax on your 1120 form, you pay that tax. You don't have to wait, what is it? You don't have to do this tax return first before you do your personal. Your personal can be done regardless of whether this one is done or not. You can issue common and preferred stock, and they don't limit how much stock you can offer. And you have total separation here from your personal and your corporation tax return. And with this one, you can have foreign shareholders. So that's the plus. For the businesses I set up, I focus on this part. The drawbacks of having a C corporation. You know, I know they like to have their name and then have the incorporated at the end. However, you have to file a federal and a state tax return for C corporations. So you're paying federal tax and state tax on your income for the state of Florida. Any other state other than the 4 states, which is who don't have state tax: Florida, Delaware, Tennessee, and Texas. Those are the 4 states that don't have state tax. But any other state, no matter what entity you are, you're gonna pay state tax except for those 4 states. That's why I love good state of Florida. But this one, you must have a board of directors. and your articles of incorporation. For the other one, you could be the only one on the board of directors, but this one, you actually need a whole entire board, segregation of duties, blah, blah, blah. So you need the president, vice president, treasurer, secretary.
I noticed you've listed board of directors under cons.
Yes, I did, and the reason I did that is because you can't actually do anything without board approval. So no business decisions are really made without board approval. However, as you know, a pastoral entity, you are the board, so you just need your approval. Your board of directors must have, you know, board meetings, be it annual, quarterly, monthly. And you have to take notes and keep those notes. And a whole bunch of other rules that you have to abide by and report to the federal government and the Security Exchange Commission and everybody else with. And governance requirement is public, so that's what I was talking about, the reporting, things of that nature, so they just have a lot of stuff they have to go through, like doing, you know, quarterly reports to the Security and Exchange Commission if you're, you know, giving your stock to the public, blah, blah, blah. A lot. So, I mean, if you plan on being a Staples, this is the way. Definitely. Okay. Any questions on being a C-Corp? No? So everybody know I'm biased. I prefer S-Corps. I normally set all my clients up as S-Corps. I have the rare occasion of setting up a couple of nonprofits, and I let them know that that's a whole nother beast, but you still gotta go through this process. And then there's a separate nonprofit process, which is a lot easier, if you apply to be a nonprofit when you set it up. So it's the difference between a 3-page application and a 33-page application.
That's a big difference.
I have one
Yes.
other question. When you set up a DBA as an entity, does that follow the same like tax and liability of whatever business it's doing business as?
Okay, so when you do a DBA, which is basically a fictitious name,
Mhm.
on Sunbiz, the company owns the DBA doing business as.
Okay,
And everything rolls into the entity.
okay,
So most people, individuals don't set up DBAs. You have to already have your entity set up, and then the entity owns the DBA.
Okay.
So you're still have to set up an entity first.
yeah,
So let's say you're the chamber, but you want to be doing business as, I don't know, the Osceola Chamber. You can set that up, but the chamber owns it, and everything still gets reported under the chamber. The other one is just a name you're telling people, so you don't actually need separate books. It's still, because the EIN belongs to the entity that set up the DBA. Okay. And the Sunbiz rules for fictitious names are different. So on Sunbiz, the entity itself have to renew annually. DBAs renew every 5 years.
LLC, but, and you don't, it's not an S-Corp, can you switch to an S-Corp like middle of the year?
Yes, but I don't prefer it. So when you set up your LLC, the IRS gives you 75 days from your date of incorporation to complete the S-Corp application. If you wait 3 years and say, okay, well, I'm making money now, I don't want to be taxed, so in June, I want to change, in June of 2025, I want to fill out the application and become an S-Corp. What the IRS is going to do is they're not going to make you an S-Corp as of the date you file it. They're gonna make your S-Corp active as of January 1st of the following year. So it's clean, because then you'll have to do whatever tax return for 6 months. So let's say you have a partnership. You have to do a partnership for 6 months, and then an S-Corp for the latter 6 months. which is complicated and
Yeah.
they're not really smart. So, and that's basically since 2018, they've been doing that. A lot of things changed in 2018. Before you used to be able to do it, and whenever you applied, that's when they made you active, but not anymore. They afford you. So I tell everybody, just wait till December and then we just fill out all the applications because they're gonna make you an S-Corp as of January 1 anyway. So it's just easier. You wanna be an S-Corp?
I don't know what I am, so I don't know first.
Identity crisis. Do you have an EIN number from the IRS? So in the letter, they tell you what form you're supposed to file. Okay. And they tell you when the first form is due. So a lot of people overlook that part and they don't file a tax return until they're making money. And I'm like, even if it's a zero return, you still have to file the return or the IRS charge you penalties. I believe it's $250 per shareholder per month from the date you're supposed to file to the date you do file. That concludes my presentation on business entities, and I have a separate one on nonprofit organizations because of the extra steps you have to go through to actually set up a nonprofit entity.
I think that would be a beneficial presentation because I get people in here on a regular basis say, I'm going to set up a nonprofit to do, and they may or may not know what they're talking about. And so let's keep that in mind, maybe Q1
Okay,
of 2026 to have you do another one on that. Okay. Well, there's a-
all right, thank you.
Yeah, thank you. Well, hopefully you've gotten some valuable information here, and you may, like Heather, want to go back and look at your paperwork and see what you are and how you are. And if you have any questions, we can do some follow-ups here by getting in touch with She-Lia. Just go ahead and contact the chamber, and we will put you in touch with She-Lia at Account on Us. And she's in here on a regular basis. So we'll certainly be able to connect you. So thank you to She-Lia Henry for today's presentation. Don't forget next month's toolkit. I will have the date for you exactly, but that's going to be Experience Kissimmee and how your business can be a tourism partner. So on behalf of all of our sponsors, thank you again for joining the toolkit, your tools for business. Thank you.
Good job, She-Lia.
Thank you.
It was a technological train wreck.
Sure.
And it was recorded, that's good. And
I think you're still recording.
I know I am. That's why I'm not saying too much. I'm trying to get back to the Zoom. See, nothing's fun to
Just turn the computer up. Unplug it.
record right there.